Hey guys, this is Market Update. Definitely time to get serious at this point because this is the point where a lot of money is made, but also a lot of money can be lost. This is an insane breakout right here, and people are starting to get a little bit fancy. It's getting a bit noisy online. You can feel that. A lot of, kind of investment talk coming out, gamma squeezes, MicroStrategy, convertible bonds. So I'm going to try and explain all this to give you a grounding of all of these things, where we are, because we don't want to get caught out at this point. We are clearly massively in a rip-roaring bull market right now. That's an opportunity, but a lot of the fanciness also leads to potential risks. So we don't want to get caught out. I want you to make money. I want everyone to make money here. We have to do the right things consistently. So what we're seeing is huge buying from leverage players, people coming in, and actually the normal bull market rotation. So I want to go over that in this cycle, in this video. So look, there's nothing to say here. We're obviously just going to reach up, probably hit over 100K, something like that. And then at some point, we're going to get a really nasty drawdown, but we don't know where it's going to come from, right? We don't know if it's going to go up to kind of 120, 125, and then pull back kind of 30%. You don't know, right? And so this is the point where it gets very, very volatile. People are going to trade this. Some people will win, some people will lose. We have to remain consistent. I'm going to show you the end of this video where I think Bitcoin can get to. And so for me, I just say, what's the price I think it can get to? What's the price trading at now? Am I happy with that risk reward, either for this time frame, in this cycle time frame, or if I want to hold for like the next 4 years for the next cycle? Because we know in the middle, between the top and the top of the next cycle, there is going to be a massive bear market, just like every other time, because Bitcoin is not a stock. It doesn't buy back stock. It trades like an ultra long duration bond, and it's very sensitive to bond prices as well. And those cycles will persist. And so Bitcoin cycles will persist. So I want to go over all of that in this video. If you do trade crypto, Bybit have a huge deposit bonus up to $30,000. So whatever you deposit, you can get a deposit bonus to trade that. Just check the link down in the description for that. Crypto Investor course, 21 million Bitcoin, 21% off the Crypto Investor course as well for this month only. So that's running out next week. Check the link below for all of the details. There's a lot of what I call bull market stuff going on, right? So prices rise, people make a bit of money. People have put their trades in during the bear market. Things are working out. And then what you see is, of course, as things have worked out, then you get the attention around those. And so you get a lot of attention online. You get people doing podcasts talking about gamma squeezes and this, that, and the other, and MicroStrategy issuing convertible debt to take advantage of a premium that they have in their stock, issuing debt, zero, right? All of this stuff sounds amazing, right? Talking about gamma and delta and all this stuff. But really for individual investors, why is that important to us anyway? Right? We actually just take a look at the cycle. It's a debt-driven cycle. Bitcoin trades off the back of the debt, the prices of treasury bonds, essentially. So that's as simple as we need to make it. All of this stuff is very noisy and it can lead to mistakes. Here's what's happening. We are going through the exact same cycle as every other time. What we can see here is that this move has been started by essentially new entrants coming in, and even older entrants just saying, I'm going to buy now because I think the price is going up short term. So it's a classic bull market. Now, what we're seeing is that people that bought the ETF hype have been sitting on a kind of consolidating price for the last 8-9 months. They are now selling. So those ETF buyers are now selling to new entrants. Longer term holders aren't selling that much. You can see this right here. This pink shading is essentially long-term holders 6 months to 2 years. So it's these recent buyers that are actually selling. The orange and green, which is 2 years plus holders, aren't really selling right now. Now, what that means is that longer-term holders typically have a lot more research under their belts. They probably have at least 2 cycles in them, and they kind of know that this isn't the top for this cycle, and so they're not selling. What you're getting is speculative frenzy from new entrants, which is totally fine. And it's actually enabling a lot of arbitrages to happen throughout the market. For example, MicroStrategy is taking advantage of this, which I want to talk about in a second. So what we're seeing is mid-term entrants and very new entrants coming into the market. Now, this is good because this shows us that we're in a bull market. Almost all of the supply taking profit is from 56K plus, which is actually very young, right? These are not long-term holders. These are basically traders who came in, wanted to trade the ETF, maybe got stuck in there because it kind of consolidated and now they're selling out. They actually may have to buy, they may buy back higher because what they've done is bought at like 60. They think they're doing a good job selling at 90. Maybe they don't realize that Bitcoin isn't a stock and it trades like a long duration bond, and bonds are still actually coming down on the short end, pushes the price up. Bitcoin's going to react to that and actually go higher. So those guys may be thinking they made a good trade, but there's like another 100, 150% to go in the price, which they may actually buy back higher. In any case, traders right now are taking a lot of risk. I'll explain that later in the video as well. So long-term holders know that the price is still going way higher than this with a lot of volatility in between. All of the stuff we're starting to hear right now, you can feel it, is bull market stuff. Talking about gamma squeezes and arbitraging, different premiums. All of that stuff is very technical market stuff, but it's really irrelevant, I think, for us because we have to make investment decisions, right? So what's happening is that the Fed is dropping interest rates, which is pushing up the price of bonds on the short end. And we're pushing liquidity into the market. You can see that. And that pushes the price of Bitcoin up because it really trades like an ultra long duration bond. It's not an equity, but it's risk on, risk off. You can see that during the last bear market here, I think this is the all country world index, right? So just world stock market, and Bitcoin essentially is a very large diversified financial index, just like this. Risk off. Money supply dropped, actually went negative. You can see that. So that change, that delta there from here down here, that brings us into a bear market for risk assets. Well, now we're pumping again, right? You can see liquidity pumping in and it's positive. If liquidity is positive, that means risk assets will price up as well, and Bitcoin's doing that. Bitcoin will continue to do this as long as money supply is positive and as long as the market is expecting the Fed to drop interest rates a little bit. We're going through this cycle. That's it. And that's how we have to make decisions. We cannot get involved in these intricate market details because they are noise and they're not signal. Should I keep investing? I think right now, yes. The price is pretty high. I don't really like paying this, to be honest. But I still think, under 100 for this cycle is decent. This shows that as an investor, an individual investor, without worrying about the technical details of what everyone's doing in the market, as an investor, you have to dollar cost average most of the time. Bear markets come and they're not great, but they don't last very long, and we get the bull market again. And so BTC is the outperformer. It's the thing I want to accumulate. You can see this as well. Bear market provides better entry point only 20% of the time. So you have to keep buying, unfortunately, right? And I think 100 is still within the bounds of buying. It's only, in my view, if we get up to like 200K, that there just is no risk reward left, right? There's no reward left. There's just risk left at that price. At 100, yeah, it's still touch and go. When prices rise, everyone has to find a reason why the price is rising, a specific technical reason why the price has changed. I've just told you, I've just shown you that chart there, that the price is rising for Bitcoin because Bitcoin is an ultra long duration asset. It trades like that. There is no expiry to Bitcoin, right? So it's ultra long duration, and it is pricing in a lowering of interest rates, which means bonds on the short end get bid up in price and more liquidity of fiat currencies. And we're pricing it in the fiat currency. So guess what's going to happen? That is it. All of these specific details are also very, very good, but half of these won't happen. And that doesn't matter because during a bull market, the noise, right? You can hear the noise. So the Bitcoin Act, right? This is going through the states, the House, I think, right now, which is, a act to try and get Bitcoin on the balance sheet of the United States. Is this going to pass? Who knows, right? But in any case, this is bull market stuff, right? It's bull market stuff, and it's all feeding into the speculation right here. But it's very unlikely, but who knows? Trump said to consider a crypto lawyer as SEC. Now, Gary Gensler resigned. Brilliant news. I'm sure everyone's celebrating. I certainly am. And to get a crypto lawyer in there, this is great news for crypto, right? It's absolutely fantastic news for crypto. However, because we're in a bull market, this stuff seems to have more of an effect. The next bear market, all of this same sort of stuff will come out and the price won't go up. So it's actually irrelevant if you think about it, Because we know fundamentally the thing driving Bitcoin price is that the currency is debasing over the long term in cycles. And we're in the part of the cycle where the currency is about to be debased again. They need to refinance the debt, have a load of debt at the lowest interest rate. So that's what's driving the Bitcoin price, none of this stuff. This is also great news. Again, technical market details. This is from Dylan Leclerc. He's looking at perpetual funding rates. This is important because what we're seeing is, despite a very, very big move in BTC, the funding rates are high, but not as high as last cycle. And that means that there is just more ability for larger pools of capital to come and arbitrage these differences. Now, again, technical market details, but this is very, very good for Bitcoin, because Bitcoin, this thing, is a unique type of asset, right? And it acts as digital capital. That's what it is. You can call it money if you want. It's not currency. It's not fiat currency. It's not currency. It's not currency that you spend. It's not currency that you spend in from your wallet or anything like that. It is a money. It is digital capital. And it only works if this thing is the focal point for trade. Volatility, leverage, debt placed on it, traders coming in, leverage needs to borrow money. And so you have other arbitrageurs coming in and trying to arbitrage the differences there, taking other strategies like delta neutral strategies, which will buy long spot and sell futures to try and arbitrage the interest rates that people are paying. All of this, again, technical market stuff, actually irrelevant. But the important thing is Bitcoin is now being used as digital capital in the world's biggest capital market, which is the US. MicroStrategy are doing it. The ETFs are here. Other arbitrageurs and funds are coming in, doing everything around the edges to make sure that this is the world's largest capital market. Liquid, fungible, digital around the world. Very, very good news for BTC. Again, this is great news, but we're in a bull market, and so it looks like great news and the price is going up. This is fundamentally very good, but it shouldn't cloud your judgment on where Bitcoin can get to this cycle. Now to the hottest topic in Bitcoin right now in most markets is MicroStrategy. So I want to try and explain this from our point of view again. Again, there are many technical details here that many people are salivating over. Price is going up. MicroStrategy has done really well, right? But talking about gamma squeezes and the Greeks, what they're doing here with convertible bonds and embedded call options, ooh, it sounds amazing, right? None of this is relevant to us because we can't even buy these convertible bonds, right? But let's see what they're doing here, because it's slightly misunderstood. There is a component here to MicroStrategy, and if you want to buy it, the only thing you can buy and I can buy as retail investors is the equity. And let's go over that. MicroStrategy are selling convertible notes. These are a investment banking created product with terms and conditions. Essentially, the company itself issues a bond. You have investors. Now, only institutional investors can get this stuff. So, you're talking about hedge funds, right? Banks, trading desks, etc. Family offices, with billions under management, right? They come in, they give billions of dollars to MicroStrategy. And for this particular convertible note, they get no interest. Now, the reason why you'd give money to MicroStrategy for free is because of the convertible nature of these bonds. They don't pay any interest, but these guys don't want the interest, right? It's irrelevant to get 0% versus 2% or 3% interest. It's all irrelevant. What MicroStrategy is selling is the call option within the bond. And essentially, because the convertible bond is callable for stock, the common stock of the company, which is trading on the market, these bond guys, these convertible traders can come in and essentially what they're doing is trading not Bitcoin, not stock. They're trading volatility itself. That's what they're trading. So you can come in, you give the money to MicroStrategy, and they have an embedded call option. So they can actually be converted. I think these are 55% above a certain price, right? So if the price of the stock gets let's say 100% over, then MicroStrategy can come in, convert the bonds at 55% premium, right? These guys who are buying the bonds can also trade the other securities like the stock. So what they're doing is buying volatility. They're saying, I'm going to give you the $1 billion. I'm going to get some exposure to the stock at a certain price with the call option there and the convertible price. and then I'm going to trade the stock as it's volatile. So if the stock goes up, I can just sell shares short and lock in profit on the fact that I know that you're going to convert the bond at a certain price. I think the convertible bond was going to be converted at like $670 or something like that. So if the price goes above that, these guys that gave money to MicroStrategy can just sell the stock higher, and they're just arbing the difference in volatility. So these guys are trading volatility. This is great for them. All right. So we can't do this. The convert was 0%, 2029, 55% premium, which was around 672 at the current time that they issued it, right? So we can't do this. We can't give them money like this. And we don't buy convertible notes. We don't do this. So it's irrelevant for us anyway. But what MicroStrategy are doing is getting billions of dollars in, and the buyers of the bonds are trying to trade and arbitrage the volatility between the common stock, which is trading very volatile like this, going up, right? You're seeing it go up. And they're just taking a flyer, because for them, what are the risks? They give $1 billion to MicroStrategy. The price of the stock goes up. They can arb out all the differences. They make a bunch of money because they're basically buying call options on Bitcoin, essentially, leverage Bitcoin. That's what they're doing. The downside for them is if the stock doesn't go up in price, right? Well, what's going to happen then? Well, they just get their money back, right? They've got no interest, but they get their money back. Now, that's a problem for MicroStrategy if that happens, because they don't have this money, right? They have Bitcoin and they have an operating business, which is irrelevant. They don't have the money. So how are they going to pay the cash back to these guys if this premium doesn't persist? Well, guess who's going to fit the bill for that? Common stock holders, because they'll just get diluted. They'll sell common stock in the market, whatever. They'll get the cash and they'll pay back the bondholders. Right? So the convert holders are taking very little risk, because, by the way, if you buy a convertible bond, you are also much higher up in the capital stack. So if MicroStrategy, for whatever reason, can't sell equity in the market to pay back the bond, then they'll just force it into Chapter 7 or Chapter 11, right? Bankruptcy. And they're high up in the capital stack and they get Bitcoin back, right? Because they have a call on the assets anyway. So these guys are taking, a measured risk in a very, very volatile stock and trying to arb the difference. That's great for them, but like I said, we can't do that. All right, so what can we do? We can buy stock, right? So what's the stock trading at? MicroStrategy market cap's around 100 billion right now, and they hold this much BTC, which is about 32 billion. These are off by a few percent or so, but just to make things easy. So that's basically a 300% premium to the net asset value of the Bitcoin on their balance sheet. Now, this is where some problems arise. People are saying, well, this thing is trading at 3 times the net asset value of the company. That's crazy. Not really, right? Because the net asset value is irrelevant, because it's not an ETF. It's not a structured product that has Bitcoin and should be valued at the same as Bitcoin. That's what an ETF does. MicroStrategy is completely different. MicroStrategy is an operating company, and that means it can earn more revenue and assets per share over time. And that's exactly what it's doing now, right? So what MicroStrategy is actually doing is that they are arbitraging something that other companies can't do. There is demand to buy Bitcoin from people that can't buy Bitcoin. Convertible bond traders can't buy Bitcoin. Some family offices and other funds can't buy Bitcoin because they are prohibited by the agreements that says you can only buy marketable securities in the USA. So you can buy an ETF if you want, and you can buy converts, right? Some funds may only buy converts, right? There might be a trading desk at a bank that can only buy and sell convertible bonds. That's it, right? So they cannot buy Bitcoin, but Bitcoin is the thing because it has more volatility than everything else. I tell you, the one thing that people want to trade, banks, investment banks, etc., they trade volatility and not the underlying thing. These investment banks don't try to take much risk, right? Because they blow themselves up. What they want to do is just arbitrage volatility. So that's the product that they're buying. MicroStrategy is arbitraging this because they are a listed company in the States, and so they can create securitization on top of Bitcoin. They can create convertible bonds, they have the equity there, etc. So what they're doing is taking advantage of demand to buy volatility, to buy and sell and trade volatility from people. For example, like I said, traders that can't buy anything else. And for example, in the UK, where you can't buy any of the ETFs, they're not listed, right? So the only way to get exposure to Bitcoin is either buy spot Bitcoin, right? Like actual Bitcoin, but you can't put that in an ISA, like a tax account, right? Tax advantage account. So you get exposure through MSTR. So you've got a whole country here that's wanting to get exposure to Bitcoin that's being prohibited by government regulations. And so they're trying to get exposure from MSTR. They're buying stock at a very high premium, which gives MicroStrategy the opportunity to arbitrage selling stock and issuing debt. That's great for them. So what MicroStrategy is an operating company that is growing its Bitcoin per share. And that's just like any other company, like Apple or Google, who is earning income and buying back stock. So the earnings per share, right, they're canceling stock, the earnings per share goes up. And they're buying back stock and canceling it. So they have an earnings per share, right? So if a company earns $1 billion or whatever, you know that per share, this is X amount of dollars. That's what MicroStrategy is doing. They are taking advantage of these arbitrages to increase the amount of Bitcoin per share. And so just like any other company, you don't value that at 1 times earnings, right? So like Apple or Microsoft or Google, they aren't valued at 1 times their earnings, right? You put a multiple on it, 10, 15, 20, something like that. So 20 times earnings. That's why they're worth trillions of dollars, is because you put a 10 times earnings on what they're earning right now. MicroStrategy is earning, through all of this arbitrage, more Bitcoin per share over time. So what you can do is just say, if you're earning, I don't know what the numbers are, if you're earning $3 billion a year in Bitcoin, and you can carry that on for a decade, then what multiple of that 3 billion should I put on your stock and that ability to earn? Plus the fact that you now have Bitcoin on your balance sheet as an asset, which will also be going up at, let's say, an ARR of 20%. So an ARR of 20% plus your earnings per share going up. And so you have to put a valuation on that. So what's important for individual investors is that when you're buying MicroStrategy, you're not buying Bitcoin. What you're doing is trading the market's perception of its ability to earn a certain amount of more Bitcoin per share over time. And I'm not saying that's good or bad, but I am saying it's extremely volatile. Because right now the premium is 300, and during a bull market, we could see that premium grow as people take more positive bets on the fact that the premium is high, which means MicroStrategy can arbitrage the premium more and increase the Bitcoin per share more, and Bitcoin is going up higher in price. So a lot of positivity. Now, during a bear market, what happens? Well, credit usually dries up. Less demand. Less demand and less ability to raise credit means potentially the amount of Bitcoin per share that people were pricing in the bull market actually doesn't come about, and that starts to get crushed down a little bit. Now you have a situation where you're trading the MicroStrategy stock, let's say at 3 or 5 times, and it actually should be valued at maybe 1 or 2 times, on top as a premium. And by the way, the Bitcoin has dropped 50%. So not only is the net asset value going down, but the ability to earn more Bitcoin per share would also come down. So you've got a double crush. And in a bear market, it could get absolutely wrecked because it goes too high and then too low. So with MicroStrategy, what you're actually doing when you're buying the equity is trading the market's perception of its ability to grow Bitcoin per share. And that may get crushed, or it may go really well in a bull market and really poor in a bear market. It's not Bitcoin, right? So again, I'm not saying this is good or bad. I'm just saying it's not BTC. And BTC, I think, should be the basis. Yes, there's volatility, but in terms of risk, all of this risk isn't there, right? CEO risk, strategy risk, right? Counterparty risk, all of that stripped out. I'm not saying Bitcoin's no risk, right? Volatility, yes, but that's the difference. And so I hope that helps. This is all bull market stuff, and it starts to become extremely unhelpful over time. We are without a doubt in the mature stage of the bull market now. And this is actually just when, mathematically speaking, the risk reward is getting worse and worse and worse. Like, let's go back to basics. This is my long-term trend for BTC, and I've put this out there for years, and I stand by it. By the way, I could be way wrong. Okay, so my kind of trend analysis here had Bitcoin potentially even going down to like 12K right here, and it didn't reach anywhere near that, right? Hit 16, 17. So there was a big gap here, and we could have a big gap here. It could go a bit higher, might not even reach here. We don't really know, right? It's a volatile asset, so we just can't tell. But I stick to this, and I stick to these generalizations about cycles, which is right now at 100K, the risk reward is just not very good compared to what it was during the bear market. Okay, this is the risk reward trade. Anything under this line is the risk reward trade. Okay, because you're getting at much lower prices, 20K Bitcoin. You're looking at a 10x if we go up to the top of this range, right? A 10x trade, that is a good risk reward. Buying at 100, because you think it's going to go to 200, you're looking at 100%, which look, is still amazing, right? Still unbelievable. And I genuinely think that can happen, but it's not a 10x. It's only a 1x, or a 2x, sorry, right? 100%, 2x, double. Risk reward and playing percentages is the way to invest, in my opinion. So it's just about here. Don't FOMO in thinking what's going to happen. Pick your price that you think it may get to, pick the price that you're happy to pay, and then pick your time horizon. Because at some point, and it's going to happen, right, at some point when the central bank has done its job, which is help the treasury refinance, at some point, things will draw down again. At some point, the market's going to get over its skis, and that's that. You're going to get like a 30, 40% drawdown. We don't know the prices, right? So like I said, it's 10:30, people are getting sloppy, and we need to make sure that we play the percentages and go back to basics, because that is how you just outperform over time. I still think there's a long way to go in this bull market. I'm not bearish. We just have to, look, I'm bullish down here. Go and watch the videos. It's just unmitigated bullishness. Up here, I'm sorry, but I have to actually get bearish because the risk reward isn't there. Taking the opposite position of the market is literally a thing to do. So if you do trade crypto, Bybit deposit bonus down below, up to 30K, and 21% off the crypto investor course link below as well, just for the end of this month. I'm James, it's Mazzy G. Cheers for watching, and I'll see you in the next one.